The Toronto Real Estate Board stats are out. So what does that mean? I'm going to give you the contrast and compare in terms of what is happening on the ground floor, what they're reporting, and what I'm seeing in terms of sentiment, so you can better understand this market as it's unfolding going through the spring market. So without wasting any time, we have recently seen a resurgence in sales activity compared to last year. True, that is happening right now. And the market assumption is that the Bank of Canada has finished hiking rates. Yes, maybe, who cares? Does it really matter at this point? I think it's a foregone conclusion. We're not going to see any more hikes. The big question is whether or not we're going to see rate cuts. And this is the big one because a lot of people, at least in the real estate community, they assume that we're going to see rate cuts very soon. And that doesn't seem that obvious to me. But maybe if you're in the know, maybe let me know in the comments below when you think we're going to see rate cuts, because as of right now, that is not that clear to me. In fact, I feel just like with the rate hikes, which were delayed, we should have started raising rates a lot sooner during the COVID cycle, and we did not. I think this is going to be a similar situation here where a lot more damage is likely going to get done by elevated rates like we have right now, and the cuts are likely going to come in at a much later point. But anyway, that's just me speculating. That's what I feel. If you want more speculation in the future, just please like this video, subscribe to the channel. But let's get into the stats and talk about sentiment and what's actually happening. First and foremost, let's talk about price appreciation and price changes as per seasonal norms versus actuals right now. The big surprise last month is that prices at the end of January actually went down, and typically going from December into January, prices do go up. So this year we went against trend. That was very interesting. I didn't expect it, but it did happen. But here's where we are now. I made a bold statement February 7th of this year that February and March of this year, we're going to have price increases, and I'm 99% confident of that. So here we are in February, first month, I got one win here, and I'm pretty confident in March, we're going to see the exact same thing. Now, in this case, obviously the price appreciation for February was extremely strong. I don't anticipate the exact same thing to, play out in March. We're going to have an appreciation in prices, but I don't think it's going to be anything like this. It is important to note that this is obviously not across the board. So when I look at GTA data, I'm looking at everything, all property types, everywhere from Mississauga to Ajax to Newmarket, everything all in one. This is to give us general sentiment. If you break down the data on a property level or looking at different areas, you do see that every place is behaving a little bit different. So as an example, I bought a unit for a client over the weekend in downtown Toronto, a condo unit, and we got it for $900 per square foot, which is really good because typically in this building, they would go for a lot more than that. So condos in the downtown core are struggling, especially if it's anything over 500,000. Units below 500,000 are doing okay, they're selling, but anything above that, it's slow. And in fact, prices actually did go down on condos going into March. On the flip side, if you look at detached between $1 million to $1.5 million across the GTA, they're doing exceptional, they're selling very quickly, and you see a lot of demand, which is pretty much expected. Typically, we see this quite a bit in the springtime. Change a little bit this time is that anything over $1.5 million is very much hit or miss. For example, if you take Markham, which has a higher median price on average compared to the rest of the GTA, where median price for a detached in Markham is maybe 1.65, somewhere in that range, 1.7. The median detached in Markham actually went down going into February. So actually prices went down despite all of the GTA pricing, median pricing going up. You will have pockets and different property types actually going down, like the Markham example. I do expect prices to go up next month. Let's wait and see. Maybe I'll get 2 out of 2 on this one. To support the fact that we actually do have a fairly healthy market right now, this is a very interesting metric here, and this is based on relists. So for example, you list a property, if it doesn't sell based on a bidding war, whatever strategy you did, if it doesn't sell or you want to change the price, typically you will relist it. So the more you're relisting a property, the colder the market is, meaning that things are sitting on the market longer, they're not selling. As you will see right here in February of 2024, our relistings are actually going down, and the lower the relistings are, the hotter the market actually is. And as you'll see, we're trending down. In particular, Halton and York region are leading the way with the least amount of relists, and you're kind of seeing it in the prices in particular pockets. Now, this graph is probably one of my favorite ones because this is where we identify when trends are about to emerge. Now, there is a slight trend kind of happening here. It's a little bit too early to tell. So first of all, let's look at the red line, which is new listings. So currently, new listings are on trend. We are seeing them climb a little bit faster than seasonal norms. That's okay. We're pretty much on trend. And then for sales transactions, this is the one that indicates the health of the market. That means how many properties are actually being sold relative to what we sell this time based on seasonal norms. So as you will see, we sold 5,600 properties. Typically we sell 6,300, fairly close. We are on trend. And this is coming from 2023 or the tail end of 2023, where we were hitting record lows in terms of how many properties we're selling. We would have months where we should be selling 8,000 properties, but we would sell 4,000 properties as an example. So in this case, what you're seeing here in this graph is we're seeing a fairly healthy market, and I expect this to continue. Now, we should note there's some divergence happening, meaning that absorption of properties is a little bit below and active listings or new listings coming on the market is a little bit higher. So if this continues, obviously we may see a trend where we're going to have more listings and less sales. But as of right now, I don't think it's valid. We can't call it a trend yet. We need probably another month or two of data to see what this does. Now let's talk active listings. And this is the one that surprised me the most. I was expecting that our active listings would probably be closer to our seasonal norms, which is about 13,000 listings. For February, we came in at 11,000, so we're roughly 15% below. I do believe in March, we're actually going to get closer to our seasonal norms. And I mean, you're seeing it everywhere. You're seeing the coming soon signs and all that stuff across pretty much every neighborhood, which is normal. This is the time of season where you're seeing this stuff. I am surprised that we're still below because it does feel like we're back to seasonal norms. And I think we're going to be at more seasonal norms in March. So we'll see how this goes. But this does show that it's still a very good time as a seller to be out there because we don't have that many active listings. So inventory is relatively lower than where it should be. Let's keep things balanced. So in terms of the market is doing relatively well compared to especially 2023. But I do want to point out a couple of things that are kind of brewing in the background. So I did say with confidence that I do believe prices are going to go up in February and March. And so far that has happened. Beyond that, that is where I have a question mark. I really don't know what will happen April, May, and afterwards. So we just had the Bank of Canada hold rates. Great. I mean, no surprise really. The big question is a lot of people in real estate are anticipating rate cuts, and some people are anticipating it now. And what I think, like I mentioned before, I don't think we're going to see rate cuts anytime soon, but the jacked up rates that we currently have are obviously having their impact on the broader economy. As you will see, the business insolvencies are surging to a multi-year high in January. Obviously, we're still relatively low. We're back to call it 2005 levels, but they are going up and they're going up pretty quick. So this is something to keep an eye out because this will have implications. The other point of consideration that we'll have to keep an eye out on is delinquencies and mortgages. So as of right now, the blue line shows mortgages and arrears. It is still at an all-time low, so no big deal. However, this is a lagging indicator and it usually lags by about 2 years. So as you'll see, the red line is the conventional mortgage rates, which have shot up, but delinquencies have not, or mortgage arrears have not yet. They are going up and they do lag. So we do anticipate in 2025, 2026, if rates remain as high as they are right now, this is absolutely going to go up. So we'll see what the Bank of Canada does at that point. Something to keep in mind. So obviously we really don't know what this market is going to do in the longer term. So call it 6 months out from now. And the last point I'm going to leave you with is a tweet here by my friend Dan. So almost 60% of buyers in Toronto are looking at the below CMHC insured cutoff, which is $1 million. Meaning that 60% of people on realtor.ca are looking at properties under $1 million. And the reason for that is the down payment required for that is less than 20%. The down payment required to go over the $1 million mark. And that is not a reflection of people not saving money. That is a reflection of extremely inflated real estate prices. Obviously, to get into a property over $1 million, you need $200,000 as a down payment at least. And that is a lot of money to come up with. Not everybody can do it. And it's very interesting to see that people are still stretching, but it does show that the bulk of people currently looking at real estate don't have sufficient funds to get into over $1 million, which is pretty much where most of the desirable properties are. And I mean, if you have a freehold or a townhouse below $1 million, I mean, very, very hot right now. But it's not translating to condos. I think people are still, weary of buying condos or 2-bedroom condos because of maintenance fees and the risk that that carries into the future. I hope you found this useful. We're going to revisit these numbers again in a month, and I hope you have a great week.